if you're struggling with your strategy, it means that there are certain aspects in your strategy that you don't understand. Most specifically, it's the edge that you don't really understand where it comes from. And in this video, I am going to show you a step-by-step process of building a strategy from scratch so that you can see exactly where my edge comes into play and how I can manipulate that edge so that I can consistently make profits in the market. So this video is for beginners and advanced traders who just have not found that consistency, but they are willing to put in the work. If you're new to the channel, subscribe. Let's jump into the video. All right. So step one is understanding what type of trader you are, depending on your occupation, your lifestyle, your temperament, your emotions. And there are three types of traders. We have scalpers, we have day traders, we have swing traders. For me, I prefer day trading. This means that I can open a position and hold it for a couple of hours, but I close all my positions before the day closes. So now that we know exactly what type of trader we are, the next step is understanding our edge in the market. So now we are starting to build our strategy. All right. So first things first is we need to understand the higher time frame. So what does the higher time frame really mean? It means that if you can spot a trend on the daily, it means that now you can wait for that trend on the maybe 15-minute time frame to ride that wave. So it's just seeing the future or seeing what's happening on the bigger scale and then preparing yourself on a smaller scale to eat a piece of the pie. So how do we do this? You have to keep things as simple as possible. So what is an edge? An edge means that most of the time you are correct. And when I say correct, I mean that your strategy is able to give you more profits than losses. So that means that if you have 10 trades and 5 are losers and 5 are winners, if those winners give you 2 times of your risk and the losers just maintain 1% risk, you are up 5% regardless of what the market does. And so understanding these numbers behind your strategy is going to give you superhuman confidence. So now let's talk about my edge, and it's very simple. If you look at a candle like that, that candle gives you a high and gives you a low. So one candle in itself does not give you a lot of information, but what it does, it gives you a range. So it gives you that high and that low. Now, this candle can be any time frame. So let's imagine this candle is on the daily time frame, meaning this is a whole 24 hours, a whole day. And we can label this candle as Monday. So what Monday does, Monday gives you the high and gives you the low. Now, on Tuesday, we also have to wait for that whole candle to close. All right. So what Tuesday does the next day, price breaks out and closes above the high set on Monday. So this is what we call a breakout. Now, a breakout is a very good continuation signal, and you shall see that as we continue in our videos, even in our entries, which means that there is a very high probability the next candle will continue in the direction of the breakout. Now, another thing that could happen on Tuesday is price breaks out, but at the end of the day, the close is back inside of the high and the low set on Monday, like that. So this is what we call a failed breakout. Now, a failed breakout, on the other hand, is a reversal signal. So a breakout is a continuation signal. A failed breakout is the complete opposite. It's a reversal signal. And this is exactly what I trade. Simple. So we have Monday, we have Tuesday, and then we have Wednesday. So how do you understand where your edge comes from? So here's the thing. Anytime you see Monday and then you see Tuesday give you a failed breakout, then there's a very high probability the next day you will see a reversal. So if you go and backtest this, you will see for yourself it has about a 50 to 60% accuracy, which means that if I just come to the market and only trade this, I will have at least a 60% accuracy in predicting the market. So I already have an edge in the market. So once you have a system that has an edge in the market, especially on the higher time frame, then it's very easy for you to get into those trades that are correct because you already know where the market is headed. So on this Wednesday, we don't know how price will behave. All you have to do is just come on the screen on Wednesday and look for sell opportunities if we have a failed breakout at the high, or look for buy opportunities if we have a failed breakout at the low. Now, another thing is price on Tuesday could break out and close as a breakout. So remember, we don't trade breakouts, and this is just because we have an edge in the failed breakouts. We have to stick to that. But what price does is once it breaks out, it sets a new high of the week, like that. So if that is the new high, then that means that on Wednesday, if price breaks out, then closes back inside of the range, that means you can trade on Thursday and sell on Thursday. Now, again, it doesn't have to be Monday, Tuesday, Wednesday. It can be this on this day, it can be Thursday, Friday, Monday, we sell on Tuesday. Or Friday, Monday, Tuesday, Wednesday, Thursday, Friday. So it's a cycle and the market doesn't care about the days. It's just that if you see a failed breakout, there's a very high probability you will have a reversal the next day. All right. So now we have an edge in the market from the daily perspective. So now, how do we capitalize on that? Because we already know we have a 60% accuracy. So how do we now create a funnel? So here's the thing. And yeah, I hope this is going to. So we have a funnel that looks like that. And up here, so up here is all the different strategies that you know, ICT, whatever, they're up here. Now, you go one step further and refine your strategy and say, I am only going to trade using this particular strategy once price does a specific thing. So that is what we call a failed breakout. And then once we have those pairs that have a failed breakout, we also need to narrow down to get the highest quality setups. So that means that we have to look for trades at very specific times, and then we have to look for trades at very specific levels, and then we have to look for entries after a very specific candle does a specific thing. So you find that up here you have so many trades, and a lot of you guys are stuck up here. This is where you do strategy hopping. But once you understand your strategy, then and you understand the edge, then all this comes with experience, because now as you are continuing to take your trades, you start to see patterns. You start to see what's working, what's not working. And so once you see what's working, you go to the next step, focus on that, and then on that again, you see something that's working even better, stick to that until you find that you want to take maybe 2 or 3 trades per week that are very high quality setups that are down at the funnel, down here. So if you compare your trades, if you are down here and if you're strategy hopping here, there's a very clear difference. All right, so now let's break down our entry criteria. So if we look at DJ30, DJ30 gave us a beautiful trade this week. If we go on Monday, we start on Monday. The Monday set the high and the low. And then on Tuesday, price breaks out and then closes back inside of the range. This is the close. Breakout closes inside of the high and the low. We have a failed breakout, which is a sell signal for the next day. So on the next day, I want now to filter out as much garbage as possible so that I can get the highest quality setup. All right, so how do we filter? Step one is time. So time means that you come to the trade at the specific sessions. And in that specific session, you also have a specific time where you know the highest probability setups for. So for Asia, the timing window is between 9 and 11 p.m. New York time. For London, time is between 3 to 5 a.m. New York time. And then for New York is between 9 and 11 a.m. New York time. Now, once you know your time, the next step is understanding the highest probable level where if price reaches that level, you are likely to see a reversal, which means that for us, we are looking for price to come to the high of the week and trigger liquidity. So in our timing window, it's 9 already. We wait for price to trigger liquidity. So we see this pin. Let's delete it and go on the 5-minute to see it exactly how it played out. We see that price at 9:30 clears liquidity at that high. So we know we have other time frame traders in the market. Next step is we identify the most recent level. So our most recent level is this area here. We have 1 touch, 2 touches, 3 touches, 4 touches. And the moment we break below that level, then we have a breakout. And remember the theory. If you have a breakout, there's a very high probability that price will continue in the direction of the breakout. All right, so what does price do? Price breaks out. All right, you get in. As once price closes as a breakout, get in, stop loss above the breakout candle, and then you are targeting this low here, a 1:4. And then you let the market do its thing. Simple. So basically, all you want to do is come to the market and identify as many trades as possible that look like this. You won't know which ones will be winners, which ones will be losers. But all you know is that you have an edge in the market. And if you just take as many trades as possible that fit your criteria, then you are guaranteed to win regardless. So this is exactly how I would do if I was to start over again. Now, if you would like me to teach you this strategy one-on-one for 90 days, then book a call. Link will be in the description. And if you got value from today's video, subscribe and I will see you in the next video. Peace out.